course, we're going to take a look at what's happening over in Nigeria's fixed income market. Now, the secondary T-bills market resumed trading in high spirits with stronger bull swings relative to last week. Yields on the median long-term tenors dropped an average of 13 basis points. The bond market, on the other hand, was relatively dull, with only the April 2015 maturity seeing much action. Of course, there appeared to be some selling bias on the shorter tenor bonds as well. But joining me in the studio to discuss the bond market is Akin Dawodu, who is the treasurer at Citibank. Great to have you in the studio, Akin. Let's talk about how the bond market is performing. I mean, what's your take on the market's performance over last week? Like we said, the bond market saw investors taking a cautious approach. A different picture in the T-bill markets. What's your take?
Well, on the bond side, you saw a very strong auction in the third week of November, where the 10-year yields and the 7-year yields dropped significantly. 10-year yields almost broke 12%, which is a very important level. So after that, that was a bit overdone, and as a result, there was a bit of a backing up in the aftermath of that. And the past week has seen some consolidation after a week or two of backing up. So it's not surprising that yields have generally trended upwards, except for the April 15, as you mentioned earlier, which has rallied strongly because it was outpriced. It was badly priced anyway. Not much happening. The year is winding down. People aren't doing that much on the fixed income space right now, especially on bonds. People are still coming into the T-bills, though, which you alluded to in your comments. There's still a lot of offshore interest in the T-bills, given the time of year it is. And we're still seeing inflows, despite the thinking that in December you would see more outflows as people wind down. So more interest in bills, intermittent interest in bonds, but in general, the markets are winding down for the year.
Right, and you mentioned still some interest in T-bills, and certainly we have an auction coming up during the course of the week. 128 billion naira will be auctioned or offered in the market. What's your expectation for that? I mean, a lot of traders say they see it being oversubscribed.
Yeah, chances are you will see it being oversubscribed. Essentially, in terms of maturities, it's a wash. The amount maturing is more or less equal to what they're offering. Like I said, there's still decent interest in T-bills. The T-bills offer very decent carry in terms of the yields relative to other currencies, so offshore interest will remain strong. And as long as that continues to be the case, you will see oversubscription and maybe a slight downward bias on the yields. And I think that it'll be pretty consistent around these sorts of levels or a bit lower. No major changes there.
Right. Now, as we wind the year down, I mean, there's no argument that we've seen a lot of development in our bond market this year. I mean, we've been added to the JP Morgan emerging markets. Barclays as well added us to their emerging market index. So I'd love to get your take. I mean, what impact do you think this is going to have on our domestic bond market as we go forward? I mean, many people say it may revive some of the subnational bond markets and certainly the corporate bond market as we go into 2013. What is your expectation, Akin?
Well, two things. In terms of the subnational bond market and the corporate bond market, what will revive those is more the rally in the yields.
Right.
And the rally in yields, rally in prices in government bonds was occasioned by inclusion in the JP Morgan index especially. So the fact that that caused yields to drop suddenly makes it attractive for subnationals and corporates to start issuing again. As we've seen, Lagos State, Osun have come out in the past couple of weeks, and I'm sure corporates will follow in 2013. So the problem was always the level. Government borrowing and the tightening policy of the central bank had pushed bond yields so high that it crowded out the private sector. Now with new demand coming from offshore because of inclusion in the indices, you now see the yields coming down and the prices going up. So there's now room for subnationals and private sector guys to come in, and we'll see that. Over and above all that, the inclusion of Nigeria in these indices really is increasing the connectivity of the Nigerian markets in general to the international markets. And that is a theme I think we'll hear more of in the future. It means a lot for regulators. It portends a lot of changes for regulators and for operators like ourselves. Right now, Nigeria will be much more vulnerable to external shocks than in the past, and will also benefit from external trends than they've done in the past. And that means the market will be more dynamic, and really everybody will have to look at things a bit differently than what we've done historically.
That's very interesting. But tell me more about your outlook, especially when we look at the macroeconomic picture going into 2013. What is your outlook? I mean, GDP, Q3 GDP down to 6.48% compared to 7% in the previous year. What is your take for the markets, for the macroeconomic picture, and how it's going to impact our markets as we go into 2013?
Well, I think the Nigerian markets, despite the downtick in GDP, Nigeria's done quite well macroeconomically relative to many other parts of the globe. You've seen many high-growth economies slow down significantly. So Nigeria hasn't done that badly. I think some people feel some of the downturn was due to the relatively high interest rate environment. It's debatable. But with the fiscal consolidation, we're seeing better congruence between monetary and fiscal policy. And with some prospect of easing in the new year, I think Nigerian growth will remain relatively robust. And of course, oil price is always important. Nigeria is a mono export economy. So if that holds up, the outlook is reasonable. I think strong growth somewhere in between 6 and 7 will continue to be the norm in 2013. There will be no major changes.